Good morning, what's going on everyone? Been getting a lot of questions lately around the share market and its performance, and obviously there's getting splashed all over the media, and thought I'd take some time to unpack some of this for you and give you an overview of what we can see happening and what we're expecting to happen for the rest of 2019. Timely video because there's a whole lot going on in the way of politics, the economy, property prices, and the share market as well. So a lot of volatility around in all of these sectors. So hopefully this little video can, demystify some of that for you, put your mind at somewhat ease, and just give you some insights. Being informed can stop you making irrational and foolish decisions. So look, what we came off the back of the end of last year was quite a disappointing finish to 2018, albeit the beginning of the year was quite spectacular and we all had a very good run up across many of the asset classes. But it did finish the last quarter and left some people battered and bruised, where I saw it as more of a good buying opportunity. However, what we saw in 2018, we're probably expecting to see it again in 2019. The year will probably start quite bullish. I think you'll notice that the markets are up in the Australian share market by about 9% from its lows last year. So we're expecting it to actually push towards its peak early on in the year and then act very much in accordance with what we saw last year. So across the board, we're expecting a largely flat share market for the remainder of 2019. Now, there will be opportunities in there based on the high level of volatility that we're seeing in the markets, and that will continue. So there will be some opportunities there, but it will be volatility driven. Economic growth is mixed, and we're expecting that to probably continue out through the remainder of 2019 as well. So the US is probably going to plateau somewhat. China, we're expecting a slight recovery. And in Australia, we've got a bit of a concerning thing with credit rationing and also the Australian federal election uncertainty. So politics will be a contributing factor through all the markets throughout the remainder of the year. We'll have the Australian federal election, US-China trade negotiations, the BREXIT debacle, European deficit politics, and there's also the U.S. Presidential and Congressional relationship, which is strenuous at times. So these all have the ability to cause issues in the share market. What we have noticed with some of our high net worth individuals is they're moving towards a little bit of a safer zone. And what I mean by that is they're moving from the high risk assets and growth assets into some income plays, which would be things like your MCP Master Trust, Qualitas real estate, income, the Latrobe 12-month term, all looking very attractive, providing a little bit of certainty in these uncertain times. So obviously following on from that, we'll probably see a continuation of property price decline in both Sydney and Melbourne in the vicinity of about up to 8%, a further 8%. Southeast Queensland should be relatively stable, with a lot of the oversupply of units in Brisbane probably being mopped up by the end of this year, which will see a normalisation of those property prices and hopefully putting a little bit of upward pressure on those rents. We'll see how that pans out. So some questions for you that you need to ask yourself or maybe have a chat with your advisor is, first point is, do I have enough cash on hand? Now, cash is king. Liquidity is so important and never more important than in uncertain times. And there's another reason for that is it's always good to be liquid, and it gives you a great level of peace and certainty, but it does give you opportunities. And if you've got cash on hand to capitalize on a volatile market where a good company with intrinsic value falls to a price which we consider to be fair, if you've got cash on hand, you can capitalize on that and pick up a really good valued stock for what we call a cheap price. So that's certainly one worth noting. Are you servicing your debt? Is your debt to service, DSR, debt to service ratio, and debt to income ratio in alignment with your entire portfolio and keeping you safe? Have you adequately diversified? So where is your income coming from? Are you relying upon franking credits? If Labor gets in the next federal election, what's that going to do to your income? And also, asset allocation is the key determining factor to anyone's portfolio and their success. So if you can make sure, or with your advisor, make sure that your allocation towards each asset class is appropriate to your tolerance for risk and how much money you're willing to lose, then you probably could have a safe journey throughout 2019. Asset allocation, 80% of your portfolio performance will come from that one. And the final question would be your international exposure. And are you diversified in that? Where are you sitting from your international perspective? And have you considered some other alternatives outside the US markets, maybe some emerging markets? So for the remainder of 2019, while we don't expect the major downturn or a major downturn to persist for too much longer, we do believe that it's quite possible for both the Australian and the international share markets to test both the lows of 2018. So with that in mind, guys, take on board those comments and cautions. Be pessimistically opportunistic in your outlook, and if any of this resonates with you and you'd like to know more, direct message me or email me at michaelc@primefinancial.com.au. I'm more than happy to have a chat or conversation or send further dialogue about the comments we've just made now. Guys, have a great 2019. All the best, happy investing, and play it safe.